has. Thanks for that. Well, joining us now is Tan Tembo, who's the Capital Dynamics Managing Director. Tembo, great to have you with us. I mean, we are starting to wind down, right, when it comes to equity markets, investors kind of starting to think about the Christmas holidays, but we've got a pretty packed week when it comes to central bank decisions as well as data. What are you watching out for?
Well, I guess it has to be the Federal Reserve, the FOMC meeting in the next few days. I think that's the number one focus of financial markets.
Yeah, I mean, that's largely priced in, isn't it? We're expecting the Fed to hike this week, and then that's likely to be the last for Janet Yellen and the last for this year, of course. But what kind of downside risks do you see with this change of leadership at the Fed?
I guess it's not just the rate hike. I guess it's more the economic forecast and the projections for 2018, 2019. And to see whether the pace of tightening will still be gradual or it could be, well, with the new chairman coming in, things might get a bit more hawkish, given that markets in the US are not exactly cheap. So the concern is in 2018, 2019, you might see a more aggressive pace of tightening.
Let's talk about some of the numbers that came out of China, because we have been discussing the possibility of a steeper than expected slowdown going into next year. Do you see this as being a measured kind of slowing? Our previous guest said he sees GDP of around 6.5%. I mean, that's still well within comfort levels for policymakers there.
I think we should follow what President Xi Jinping said in the last Congress, whereby targets are no longer important. I mean, they have released omitted giving GDP targets. I think we should accept that. And the more important thing is when you move away from having GDP targets, you have the government has a lot of flexibility in implementing structural reforms. I think that's more important.
All right, do stay with us in Hong Kong. Let's get back to our guest, who's going to talk a little bit more about, what investment opportunities are within this energy reform space that Joseph just spoke to us about. I want to bring back in, Tan Tembo from Capital Dynamics, the managing director there. Tell me about your picks from within. If you see this kind of cycle of reform starting as we go into next year, what opportunities would you be looking for as an investor?
Well, unfortunately, we don't focus so much on the energy utility space, I guess. This for reform is very much policy-driven, and you're going to have the regulators or the governments of whichever country that's reforming it going to do a balancing act between the interests of the shareholders and interests of the power consumers. But ultimately, the aim of such reforms is to arrive and to drive energy efficiency usage in that particular economy. So when you have, and this sort of reform is not going to be a one-year process, it's going to be stretched over 1-2 decades, and the difficulty is to ensure the returns of the different stakeholders, the interests of the different stakeholders are well taken care of. I think there are more there are sectors which are more interesting.
Can I take a guess? Are you going to say infrastructure, rail construction?
I think in terms of infrastructure, there are a lot of other areas which I find to be more interesting. The rail infrastructure, the highway infrastructure in China, or not just in China, the highway infrastructure in Indonesia, in so many other countries, are giving returns which are very attractive.
All right, stay with us. We're going to get more on your views in just a moment. But well, those were just some of the voices we heard on Bloomberg TV after the November jobs report, which told that familiar story: solid hiring numbers, tepid wages. The US economy adding 228,000 jobs last month, more than forecast. The unemployment rate held steady at 4.1% as expected. But when it comes to wage growth, continued to disappoint. Average hourly earnings increasing just 2.5% from a year earlier. Let's bring back our guest. So still with us is Tan Tembo, who's the Capital Dynamics Managing Director Director. Is this good news for the markets in the sense of for equity investors, that is, because it does kind of suggest that with inflation still lacking, with wage growth still falling behind, you're going to get policymakers in the Fed pretty tentative when it comes to any sort of tightening cycle going into next year. Do we get the Goldilocks situation for investors in 2018?
An investor in the NY or NASDAQ, you see Goldilocks. But on the other hand, if you are the ordinary Americans, you see the gap between the rich and the poor in terms of wealth and income widening. I mean, the US, the Federal Reserve has a survey of consumer finances every 3 years. And the last one that was done was in 2016. And you could see that the bottom part of the American society and the middle part of the American society are not enjoying any gains. In fact, they've seen declines over the last 15, 20 years. And you know, the markets, the NY, the NASDAQ have gone up. But the sad thing is that the number of Americans who are directly owning stocks or indirectly owning it via mutual funds have not increased. They peaked in 1998, 1999, and they have fallen sharply over the last 15 years, and they have not picked up. So yes, the market would enjoy a Goldilocks, but I think you're seeing an American society that's going to get even more divided.
And this, I assume, feeds into your call that socialism in the United States will become more popular.
Yeah, it has to be, because how would you explain the popularity of Bernie Sanders? I mean, we see a lot of headlines on the incumbent president in America, but Bernie Sanders has still retained his popularity.
Switching gears somewhat, I want to get your views on the tech rally, because you think that this one, unlike the last one, actually has legs and could go for longer. I think this current technology rally, it's not just IT, it's across all kinds of technologies. It's biotechnology, it's technology in making cars and so on. So you find that it is, I would call it a stage where computers, the revolution in computers and the revolution in internet are maturing, and you see a broadening, a blossoming of the benefits of this revolution, and it's running across all aspects of society. So this particular technology rally, if I could just be a bit bold, I think it's got many more years to go. You're not always a bear, as you point out in your notes to us. Always a pleasure, though. Tang Tembo, the Managing Director of Capital Dynamics there for us. Well, coming up, gas prices falling, but industrial